Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. I just left the dentist's office, so I got a fat lip, good people. I tried drinking some coffee and it just dribbled down. All right, you guys know I keep it real here. Hey, this is brought to you by Stock Up You, where you need to learn and earn everything you need to learn and earn about stocks and crypto. So let's get right into it. There's a lot going on. We want to talk about these pumps and dumps. Forgive me if I try to speak a little lightly. I don't want to bite my lip. All right. So look, man, it's a roller coaster, good people. And to be honest with you, it's a little expected. You know, we just don't know. Now, remember what I've been saying. I've been saying that we are waiting. So next week we have a FOMC meeting on next week. We got data. We didn't have the jobs because the government is shut down. The government shutdown is starting to hit a lot of people now in the pockets, and it's a ripple effect. There's a lot of bad things going on, but just like that, it can turn from bad to good. So we'll talk about that at the end, what's going on and what could happen coming down the pipe. S&P 500 is down again, right? We can see that. 1% down again. But if you just zoom out, we've had these up, down, up, down. It's a roller coaster. Same thing with the NASDAQ. Down today, look at that, 400 points when I first started this. But if you look at that, we've had ups, falls, so we can just call that a fall. And then up, and then a fall, and then up, and then up. So we went all the way up here, and then we wind up falling back another 444 points. And so it's just a yo-yo. When you zoom out, we're only down by almost 1%. But it's just the yo-yo ride. If you zoom out a month, you could really see how much we are really down. Okay, 1% on the NASDAQ, and a month out on the S&P 500, we are up less than 0.5%. But if you came in late and you're piling in heavy, remember I told you guys, ooh, this look bad. I'm sorry, guys. I'm just keep it going. I told you guys this is not good. I'm gonna stick to this. You guys know I keep it real here. Gold falling, right? Gold plummeting. Even more today. Look at what happened. It literally fell off a cliff, right? So look at that, down 7%. It was down 4% yesterday. And over the last 5 days, down 8%. We got Bitcoin, that's down. If we can get here, Bitcoin is also, actually Bitcoin is over the last 5 days, should I say the last week, is up 1%. But over the month, we're trying to regain some things, okay? We're regaining, but it ran up. We had the all-time highs, and it ran down, okay? Ethereum, kind of the same thing. You guys get it. Good news, bad news. Good news, bad news. Good news, bad news. And for a lot of new people, young people getting into the market, I want you to listen to this, young people, because people are concerned about you getting into the market.
But, look at the market this year. And the one thing that strikes me as absolutely maybe not a vote of confidence in currency and the dollar and fiat currency is gold. All right. And even though gold's pulled back here a little bit, it is very rare that equity markets rally and gold is up 55%, silver is up. Those signals tell you this. So I'll tell you what's worse than not having lower interest rates for the average consumer. And that's a reignition of inflation. That's worse. That is an insidious tax.
You do write this great piece in Barron's. We were just talking about it. It's called "For Too Many Young People, Investing is Like Gambling. It's a Warning Sign." And you say things look great, but you are thinking about how young people are viewing, I guess, equities?
Well, no, investing in total. Well, we just did a survey at SIFMA, and I wrote an op-ed because my takeaway from the survey was there's a clear generational divide between, older investors, they want performance. They're not as in tune to their app. Younger investors actually said performance doesn't matter. I was stunned by that. And they want to interact like they do in their daily lives. They want to interact with their social app or their app, and that's what they're doing. But when we start putting prediction markets next to investing and then blending them as if they're the same thing, we are not educating people. And I say all the time, when young people say, what can you tell me? I say 2 words, 3 words. You need to understand the difference between one word, compounding, and the second word, consumption. If you don't get those 2, you'll never be a good investor. And investing is compounding, gambling is consumption.
I agree with that. Listen, there's a difference in investing and gambling or swing trading. Okay, if you're doing options, you're going in right now, I would just be doing scalps because we're one tweet away from the market pumping or dumping, right? And right now, it's just time to really not be going in heavy on anything, controlling your position size, and thinking about long-term investments. Now, if a company doesn't have earnings, or if they don't have revenue, like a lot of the material companies, the rare earths companies that we got in and got out, the quantum computing companies, Rigetti, we got in, we got out, we took our money, we ran. But there's still room, but are you long-term investing? Because compounding interest is everything. And that's how you truly build wealth. Really, over your work history, if you just invest $10 a day, just $10 a day, $15 a day. But even if you just invested $10 a day, 7 days a week, over your work history, you're going to have way more than your 401k and your retirement put together. You'll be a millionaire. It's just that simple with compounding interest. But the question is, do you have the patience? The question is, will you buy dips in boring stuff like the S&P 500 or ETFs? And most of you, the answer is no. Let's just call it the truth. No. I'm going to keep going. We're going to wrap this up. So look at this. Bitcoin will likely stay between 120 and 125 by year's end, says Galaxy CEO Mike Novogratz. Okay, you guys, you've seen him on CNBC, right? That's what he says for right now. Even if that's the deal, I'm good with that. I'm just going to say I'm good with that. And the reason why I'm saying I'm good with that, because this will be the first year, or the first cycle, should I say, where I'm not going to sell my Bitcoin. I don't want you to follow me. I don't want you to get like me, but Larry's not selling his Bitcoin. Larry's going to sell all his other coins, his meme coins, and some of the smaller altcoins, and roll that in and buy more Bitcoin when it does dip even more, right? Now, Larry, are you conceding, saying that it's over? No, that's what this gentleman said. Mike said that. Larry didn't say that. Larry's not making that call yet. Larry thinks it still could happen late, but Larry's prepared to hold his Bitcoin and his Ethereum and his altcoins, because that's what I'm fully invested in, and not overweight in meme coins. Okay, so now let's keep this going. We can see what's going on right now on the dump. Okay, we see, while we have quantum computing, which was overinflated, this is the day. Look at how much these are down for the day. Look at that. QUBT, 12%, 17, 13. Let's go over the 5-day. Look at the 5-day. They're falling just as fast as they rose, and they keep falling. And for those of you that are dollar cost averaging in to these heavy right now, I feel sorry for you, because you're catching a falling knife, and none of us are perfect. Look, materials, right? Rare earths, MP, USAR, they're falling by double digits. This is today. Look over the 5-day. You can see they are really, really tanking. Why? Because of the off and on talks with China. Is you is or is you ain't my baby, like the old song says. And at some point, though I made a ton of money in all of these, I got out. Why? A lot of these do not have earnings, and you should not be going heavy in the ones that don't have earnings. Okay. All right. So we got in early. We got out early. Now, there are some that I'm still holding. No, not IN. I think INOQ. I still have some of that. Wish I'd sold it. Hindsight. But even while those are going down, this is what the gentleman was talking about gambling. Beyond Meat, which is a horrible company. This company is not a long-term investment. It's not. But look at what's happening over the last day, 11%. Over the last 5 days, it's going through a short squeeze. And it all happened right here. This is when it really started to pump. October 21st, it went parabolic. Look at that, 100%, right? And what usually happens is people hear about it right here, and this is where they buy, right here. So they on the 21st, it starts pumping. The 22nd, everybody hears about it. It's late, and this is where everybody piles in, right here. This is where they pile in at $6, right? And then boom, it's a short squeeze, right? So a company does a short on it, a short report, and they're shorting the stock. And this is different than doing put options. They're shorting this company. And then the retail buyers get together, right? And they say, hey, let's squeeze this. Let's hold this up. And they start pushing it up. But remember, the shorters borrowed. And then it starts pushing up. So now the shorters have to cover it, and they have to start buying back at a higher price. And just the fact that them buying back pushes it even more, and it squeezes it, and it runs up real high, right? 99% of the guys, you guys that are listening to me, will lose money in these plays. Have you gotten to some of these plays and made money? Yes. I made money on AMC and GME. I just know when not to overstay my welcome. And one of them, I overstayed my welcome knowing it was going down. I did it for the calls, but it was money I can afford to lose. All right. And so that was back in 2021. I paid my dues. I ain't paying those dues no more. I'm made with crypto. Okay. So I just wanted to show you guys everything that's going on. So now let's talk about one of the things. I'm not going to lie. I'm probably never going to get invited back to CNBC. I respect Kramer. He calls a lot of people to get in. He made a lot of people a lot of money over the years, over the last 20, 30 years, right? But every single day, this week, every single day, last week, every single day, the week before, he was pounding OKLO, OKLO, and Rigetti. And he was just saying, it's garbage, trash it, trash it, trash it. As a matter of fact, I want you to listen to it.
Bell. We've talked a lot about the ambitions of OKLO.
Yes.
Which is the subject of an FT story this morning as well.
Devastating.
Why?
Why? Because it basically says it's a $20 billion nuclear startup without any revenue, and I think it is being Sam Altman's involved.
We've known that.
Yeah,
That's not a
Sam Altman's
surprise.
involved. He's a backer, and the president likes it. Okay, so now let's take the other side. If you listen to GE Vernova, which is actually the foremost maker of nuclear power, you will find out that this kind of technology is pie in the sky. Maybe 2040.
Small nuclear reactors?
Yes. Well, they're
2040.
Their particular brand. Before
They're talking about this thing being late 20s operative, right? Aren't they?
I'm just trying to have.
We've had the CEO on many times.
Yeah, okay, so they're going to say that. Okay, everybody's going to say that their nuclear is ready. Everybody.
So if you haven't noticed, I have. I'm just going to say this, and I'm not. Like I said, I respect him. He's helped to make a lot of people a lot of money. But not just this company, but other companies like this, or should I say media sources, that's all they pump is large caps. And they're and I'm not saying him, but to some extent, they get angry when we make money and go up. Now, they have a point. You need to listen. Don't throw the corn away with the shucks. Don't throw the baby out with the bathwater. You need to listen. What he's saying is right. The other gentleman said, we knew that. We knew that they didn't have any revenue. We knew that. But you and I, we still saw opportunity and we made money off of these plays. But when you have a major media just pounding and pounding like they were getting paid to down the stock, eventually it comes crumbling down. Another thing I always notice is if it's a small cap stock, they don't like it. If it's a large cap stock, they like it. So this is the stock he's telling you, this is the play he's telling you to get into, all right? This is the nuclear play, the $600 stock, okay? GE, Vernova. And I'm not saying it's wrong, but this is one of the things that generally happens. Now, I'm going to let you guys know that I still believe in OKLO and I believe in it long term, but just like the quantum computing, they ran up so much we got to see. And I bought some yesterday and then this report comes out today and it's upsetting. I'm not going to lie, but at some point, the facts does not change. They're going to get revenue and so will the quantum computing stock. One of those companies are going to 4x, 5x, 6x from where they are even now. One of those companies. We just need to find out which one. Now, we made up to 500%, actually 1,700% on those quantum computing stock. Now, as it pertains to nuclear is going to be needed to power AI. And it's just going to take some time, good people. It's going to take some time and to accumulate. And that means not just dumping all of your money and going in real heavy on the front end. Remember, we've been in these plays and I'm just going to slowly accumulate. Now, in closing, as my lips starting to feel better, it's starting to wake up. So I just want you guys to see this. Let me pull this up. Now, I will tell you my biggest position is ETFs. I got QQQ, and you go, Larry, it's ETFs. I'm telling you, you're messing up if you are not well balanced. I got VUG. These are some that I have, okay? I have GRNY. I want to show you guys something. GRNY. And then I'm going to put VOO in here, okay? I just want you guys to see that these don't fall as much as other stock do. These are ETFs, and compounding interest is the way to true wealth. You could see the quantum computing stock down by 37%. Were they good? Yeah, they were good. They were real good, but those were swing trades. What do you dollar cost average in constantly? Whether the market is up or down. Look at this. And these are the ETFs. And you see how much they're down, even though the NASDAQ was down by 400%. But this is what I'm telling you guys with compounding interest. These are my biggest portfolios are ETFs because they're safe. Over the last 5 days, look at that. Over the last month, over the last year. Now, you see what I'm saying? And to some of you guys, this is not enough. 17%, 16, 24, 13. But these are not going to fall as fast. And if you really want true wealth, we can put VTI in here. You can put VTI. There's so many other ones that you can put in here, right? Overall stock market, 500. So I would just build an ETF of ETFs if you really want to get rich and just dollar cost average and just invest. How long? As long as you work and as long as you have a job. How much money should I put in there? Every single time you get paid, you should be putting money into your ETFs. When should I go in heavy? When you have days like Liberation Day. That's when you should go in heavy. As a matter of fact, you can look at it right now. This is when you take your dry powder and you shove it in. Can guarantee you that this is April. Watch this. See there? What is this? Liberation Day. This was right after Liberation Day. As a matter of fact, here's Liberation Day. Bam. And what happened right after that? Boom. You guys remember? Here's where I was saying sell. Here's where I shoved $238,000 into these ETFs. Right there. Right there, good people. And so that's what I'm telling you guys. If you want to build generational wealth, you got to understand it's going to take time and compounded interest. We're going to continue to go in on swing trades, grab our money and come out and come back and put it into something that's safe and long term. If you're young, and I want you to take more risk, but I want you to think about retirement and start putting in for that now. If you're older, I don't want you to have all of your money just in bonds and stuff passive. Take 5% and get into some plays that you can make some money. That's Larry. Anything I say is not a suggestion for you to buy, hold, or sell. I'm just telling you what works for me and what works for most, okay? So we're going to continue to make money. It's going to be tough. OKLO is going to take some time. It's just going to take some time. And I also got into the concrete company, Cleveland Cliffs, because they're going to get into metals. They're going to get into rare earths. But I also wanted to be in concrete because of infrastructure. So to me, that's a long-term play. Cleveland Cliffs is a long-term play, just like Palantir was a long-term play. I was buying it at $10, and I'm not going to take my next haircut until $200. So, all right, good people, if you want to learn more about stocks and crypto, make sure you check out Stock Up You. It's going to be the top link below. I will see you tomorrow when I am not under the influence, all right? My doctor, my dentist is watching this. Dr. Costetidis, look at what you did to me. But I got to feed the family. We'll see you guys tomorrow. Live, love, laugh, and learn.